Welcome to April. We have a lot to cover. There's a lot of volatility. We're going to cover trends. We'll look at the markets. We'll look at the April billion-dollar fund manager, what was added, what was subtracted, and we'll look at that report and talk through some themes that I think are pretty interesting. Again, I'm Scott Bennett, joined with Mike Olafson. We run Invest with Rules. We follow the trend. We follow big money. We follow a lot of risk management rules, and we're in a pretty volatile time where are you going to get some version of a V-shaped recovery? Is there another kind of a pull down coming? We'll look at all that. We also run a totally separate business, just so you have our background. We run IWR Advisors, which is a registered investment advisory where we manage three very fascinating trend following strategies. If you have any interest, you have the emails or reach out to us.
Let's flip to billion dollar fund manager. Let's recap what we saw in the report this month.
The report, as of this morning, it did have 43 gas signals, 7% were U-turn signals, so it's a jump ball. This is not the healthiest market, but I want to share with you what the fund, these billion-dollar funds, what really were they holding and what were they accumulating. So here are the top 10, and anything in gray we own in full and fair disclosure. Corteva, which is agriculture products, surviving this morning on a really difficult open. Ross Stores, discount retail, is showing a lot of strength. So put that Insmed. So you have biotech. Akamai, which is the AI infrastructure. Scholar Rock, biotech. ODFL, freightliners or trucking. Netflix on a U-turn all the way at the top. XPO, which is in the same department as Old Dominion, and Solstice Advanced Materials, which are in the AI infrastructure build out. That's a spin-off from Honeywell, if my memory serves me right. So let's go through some of the themes that we saw. And there, every month, there are tickers that fall off, there are tickers that get added on, and then every single night, Mike is amazing. He updates the data, and we sort it based on relative strength index, and then we are looking for gas signals that are in short-term, long-term uptrends that have our confirmation signals. But here are the themes. Theme number one, energy. It was not being chased, but they were holding things like ExxonMobil, which we own. They were holding things like Chevron. They were not aggressively adding, given the geopolitical backdrop. A lot of the funds that we do track tend to be more growth-oriented funds. They're not deep value type funds. We are going through that list, and we are looking for multiple time frame momentum. We're looking for at least 10% earnings growth. Sometimes you'll get a massive acceleration, so you might see some biotechs fly in there as well. But I'd say theme number one is energy held, not being chased. Theme number two, the industrial real economy, they are increasing their exposure. So we had a great run in Deere. So this would be the data at the end of February. We are a month lag. We use so much trend analysis to speed us up on the trend roadmap, but it's Caterpillar, it's Deere. What on earth? They're buying FedEx. United Parcel Services, UPS, that thing got absolutely pounded the last few years. Transportation. So this would be airlines and freight. And this goes into, which is next, which is the experience economy. I know they're going to get hit when oil goes up, but you have Delta and United and XPO and Old Dominion. You have materials and metals that are used in defense and aerospace. That's CRS and ATI and a gold miner like Newmont. So positioning for economic resilience and reacceleration, not positioning for the world is going to end. So I hope that's clear. So we've gone through two themes. Mike, any thoughts or questions?
Yeah, I think so far it just intuitively makes sense what's going on here. I do think it's interesting that they're not adding to energy. You think they'd still be biting on that apple, but it makes sense that they're not. Keep going.
Strong brands and experiences are still the theme moving forward. AI can't take that away from you. They can't take away the experience. So high-end brands that have had some tough times, like Lululemon Athletica, Chipotle's on the list. Starbucks on the list. Wingstop is on the list. Travel like Hilton, Marriott, Carnival Cruise Lines, Wynn, travel, leisure, getting out there. We still have that K-shaped economy where those that are doing well are spending, those that are not doing well, unfortunately, are not having the best time. Weaker, more discretionary things like Urban Outfitters or Snapchat got thrown out the window. It's this barbell consumer, strong brands, experiences, avoiding the weaker, maybe less experiential, stronger brand activity. I think that's totally subjective what you consider strong, so take that with a grain of salt. Rotation out of speculative tech. That the theme continues. It's oh boy, software is going to get their margins eaten, and that's the theme, which is notable sells were Snowflake and Zscaler and CrowdStrike and Shopify and Roku and Unity Software, which had a great bounce. So it was on that list last month. Quality plus cash flow. They're moving away from high valuations, lower profitability, and they're moving more into the infrastructure, the picks and the shovels of the AI movement. That would be NVIDIA and ASML and Applied Materials, which these are really volatile positions right now when the market's selling off. We totally get it. You'll see there's Marvell. Infrastructure networking names are on there. And the AI build out is still the dominant institutional bet, not just the chips, but the entire stack. Okay, that's a lot. So that brings us to our top 10. And if you were to look at this yesterday, it was a sea of green, and today a sea of red. That's the market we are in, as 50% of stocks are on gas and U-turn, and 50% are on coast and break. Mike, what stands out to you from the billion-dollar fund manager cut and all the data you were going through?
I think the summary that you just laid out is really, I think you're really indicative of what's going on. It's sometimes this is a classic case of forest for the trees where eyeball deep in the data, some of these different trends didn't really jump out at me. But when you and I stepped back on it a few days ago and really looked at it, this is where you could really see what's going on. So I think it was a great recap.
Thanks for your time. I hope this is information is helpful to you in your process. We will always manage risk. We've had a great start to the year. There's always volatility and there's rotations. That's really what's happening. And at this point, the honest truth is no matter where you go, if you go to CNBC or you go to Fox Business, they'll have prognostications, but they don't know. But why not just follow the trend, follow big money? I hope you have a wonderful Good Friday. Enjoy your weekend, and we'll talk soon. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.